This is a Forex Preview. Thank you for joining us at XM.com. We'll be getting a lot of data releases from the United Kingdom this week, but the spotlight will fall on the latest CPI inflation report out on Tuesday. I'm Christina Marujos. With me today is our investment analyst, Achilleas Georgolopoulos. Achilleas, what are we likely to see in the data, and how could that affect market expectations around the Bank of England's next move?
Yes, hi Christina. It's going to be a very busy week for UK data releases this week. We have employment data statistics, we have inflation, retail sales, producer price indices, so it's going to be a very full calendar. However, the market only cares about the inflation prints. The UK, contrary to other regions, continues to see very elevated levels of CPI. Wednesday's print is expected to remain in double digits. It should drop by a tad to 10.2 year-on-year increase, but it remains very, very high. Obviously, this means that unemployment, the good news from the unemployment and the employment change will be ignored, as the market only seems to care about that. Overall, the data, and particularly the inflation data, should not be a very pleasant reading for the Bank of England. 2 weeks ago, when we had the MPC meeting from the Bank of England, the governor was very positive that the inflation rates should drop, especially in the second half of the year. However, evidence up to now are not really confirming this statement. For example, the market, based on what essentially it assumes that inflation is going to do for the rest of the year, only looks for 2 rate hikes by the Bank of England. And this is quite surprising if we compare the ECB outlook. The ECB is currently seen to hike at least 4 times in 2023, but inflation in the euro area has been dropping aggressively lately. On the other hand, the UK is seen hiking only twice, despite the fact it's probably the only developed country in the world that actually faces double-digit inflation still.
And turning now to the market reaction, what should pound traders look out for this week?
Obviously, if we get a very strong inflation print, then that would probably be another excuse for sterling funds to push it even higher. To be fair, sterling has had a very good run since October 2022. If we check essentially the sterling US dollar pair, it's been climbing aggressively. Lately, there seems to be a pause in that rally. So if we get a very strong print, that would be a nice excuse for essentially the sterling funds to try and push it higher. There is a key area higher from where we are now at 124.46, which in the past month it has proved too strong essentially to break. So if we get a move higher, that will be the area where essentially the next real battle could occur.
Achilleas, thanks so much. This was a Forex Preview here at XM.com.